Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Stock market indices on Wall Street and in Europe hit new highs in a busy week of rate decisions, economic updates, and corporate news. U.S. market rally extended to the fourth week amid investors' enthusiasm about artificial intelligence and tech stocks. Investors continue to root for another rate cut next week after the release of two inflation reports this week. European markets advanced after the ECB delivered its widely anticipated rate cut and signaled possible additional rate cuts. In Asia, investors in China held out for additional fiscal stimulus, and in Japan debated rate decisions next week amid policy uncertainty. The annual consumer price inflation increased to 2.7% in November from 2.6% in October, largely driven by persistent increase in the cost of shelter, medical care, new and used vehicles, and furnishings. Core consumer price inflation, which excludes volatile food and energy prices, held at 3.3%, unchanged from September and October. Investors are worried that the recent market rally may have stretched valuations after consumer price inflation met expectations, but core rate of inflation has stayed well above the Fed's target rate of 2% for several months. Core consumer price inflation is likely to stay above 3% in 2025 and beyond for two reasons. First, because of wage inflation of 4%, and the second, most service providers are still passing on higher prices to consumers at a faster than 3% annual rate. Producer price inflation increased 0.4% in November from the previous month and accelerated from 0.3% in October. Core producer price inflation, which excludes volatile food and energy prices, accelerated to a monthly 0.3% from 0.2% and stalled at an annual 3.4% rate. The ECB lowered its key lending rate by 25 basis points to 3%, its fourth consecutive rate cut in 2024. The central bank estimated inflation to decline at a gradual pace to 2.4% in 2024, 2.1% in 2025, and 1.9% in 2026. Central bank also anticipated a gradual recovery in economic growth over the next 3 years, and GDP is expected to grow at 0.7% in 24, 1.1% in 2025, and 1.6% in 2026. The euro area is grappling with a looming trade war with the U.S. and China, political uncertainty in France and Germany, and slowing business activities in the currency union. Meanwhile, investors are hoping for at least 4 additional rate cuts of 25 basis points, bringing down the key rate to 2%. Germany's calendar and seasonally adjusted goods exports decreased nearly 3% to 125 billion euros, and imports rose nearly 2% to 111 billion euros, resulting in a 29% decrease in trade surplus to 13.4 billion euros. Germany's trade plus has been cut in half over the last 5 years, largely because of higher cost of imported energy and gradual erosion of its competitive edge in international markets. German shipments to the U.S., the leading destination for the country's goods, fell 14.2% to 12.2 billion euros. Shipments to the People's Republic of China fell by 3.8% to nearly 7 billion euros, but to the UK rose 2.1% to 6.5 billion euros. China's trade balance soared in November after exports rose and imports fell as customers front-loaded orders ahead of looming trade tariffs. China is on track to post an annual trade surplus of about $1 trillion, despite elevated trade barriers and tariffs in the U.S. China's exports to the U.S. have jumped more than 25% over the last 8 years when tariffs were first implemented by President Donald Trump. Additional U.S. tariffs are likely to have little impact in the long term on Chinese companies as most have diversified shipment destinations. But tariffs will certainly fuel inflation in the U.S., which could force the Federal Reserve to slow future rate cuts or may even support a case for higher rates in 2025. China's exports rose 6.7% to $312 billion, and imports eased nearly 4% to $215 billion, resulting in a jump of 40% in trade surplus to nearly $97 billion. India's annual consumer price inflation eased to 5.5% in November from 6.2% in October after food price inflation cooled. Elevated inflation played a key role in the RBI's Reserve Bank of India keeping interest rate unrevised for the 11th time in a row at the end of its policy meeting last week. In other economic news, the euro area industrial output declined in October and extended weak reading to more than 30 consecutive months. The Swiss National Bank lowered its benchmark rate by 50 basis points to 0.5% as the central bank attempted to weaken strong Swiss franc. The Bank of Japan's Tankan survey of large business sentiment index increased to 14 in the fourth quarter, higher than 13 in the previous two consecutive quarters. Capital expenditures by large firms in the current fiscal year ending in March is estimated to rise 11.3% from the previous estimate of 10.6%. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.24% after core consumer and producer price inflation stayed well above the Fed's target rate in November. Texas crude oil prices increased 5% to $71 a barrel and traded at a three-week high after China reiterated its commitment to provide additional fiscal stimulus. Natural gas prices in Europe dropped to a five-week low of 41 euros per megawatt hour after milder weather and steady supplies eased market worries. The euro dropped below $1.05 after the ECB lowered rates by 25 basis points, and investors held out for as many as 4 rate cuts over the next 6 months. The yen stabilized around 153 against the dollar amid growing speculation that the Bank of Japan may delay its rate hike till 2025 as the central bank wants to see more evidence of wage hikes before adjusting its interest rate policy. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite traded at new highs and extended gains for the fourth week in a row, fueled by investor enthusiasm for artificial intelligence and tech stocks. European markets extended gains for the second consecutive week after the ECB lowered rates as expected and signaled possible additional rate cuts. The Nikkei 225 stock average gained for the second consecutive week ahead of the BOJ's rate decision next week. Hong Kong and China indices delivered mixed performance after a high-powered key policy meeting underwhelmed investors and failed to offer concrete details and an execution plan for fiscal stimulus. Indian market indices advanced for the second week in a row after consumer price inflation eased and industrial production accelerated. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Broadcom soared 20% after the advanced semiconductor chipmaker reported better than expected fiscal fourth quarter earnings, and AI-related annual revenue surged more than threefold. Oracle Corporation dropped 7% after the database developer and cloud services provider reported strong revenue growth in the fiscal second quarter, but earnings fell short of expectations. MongoDB declined 7% after the database developer lifted its outlook for the fourth quarter. General Motors canceled its plan to stop funding self-driving technology by car company Crude. GE Vernova released its full-year outlook for 2024 and 2025 and held out for higher sales and free cash flows. Vail Resorts, the key resort operator, estimated higher annual earnings in the fiscal year 2025. Swiss Re, the reinsurance company, said it is targeting after-tax income of $4.4 billion in 2025. Munich Re jumped 5% after the German reinsurance company estimated the group's 2025 revenue to reach €64 billion and net income of €6 billion. RH jumped 14% after the home furnishing company lifted its fourth quarter and full-year outlook. S3 plunged 22% after the specialist recruitment company estimated a sharp decline in profits. Curry plc advanced 15% after the electronics retailer in the UK reported a narrower loss in the first half, and the company reiterated its annual outlook. Pricer AB jumped 9%, and a Swedish electronic shelf labeling provider said its partner JR Tech Solutions signed an agreement with Canada-based grocery store operator Sobeys to install 5 million digital labels. Inditex, a parent of Zara, declined after the company reported weaker than expected sales and profit in the third quarter. However, apparel retailers signaled a strong start to holiday season sales. Zalando, the online fashion group, agreed to acquire its rival About You Holdings for €1.1 billion. In the week ahead, Federal Reserve is scheduled to announce its rate decisions, and investors are anticipating a rate cut of 25 basis points, lowering rates for the third time this year. Housing starts and completions and building permits and existing home sales are also scheduled to be released this week. In Europe, the Bank of England is expected to cut its rate by 25 basis points on Thursday after a rate cut in November. Sweden and Norway are also set to announce their monetary policy decisions. Manufacturing service in the euro area, France, and Germany are expected to show contraction amid falling demand growth. In China, the last economic updates of the year will include industrial production, retail sales, housing starts, and an unemployment rate. In Asia, Japan, Indonesia, Thailand, and Philippines are set to announce their rate decisions. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfund.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you